Good morning, good afternoon, traders, and welcome to the Pro Trader webinar. Typically, we do this as a series, but we're doing things a little differently, and we have a special kind of event here for the Pro Traders, a one-off. But we're doing things a little differently, and it's with a Pro Trader here, Carmine Rosato, for stocks and futures. Many of you know who he is. He's going to be talking about his supply and demand levels. And how he reads the order flow within Bookmap and optimizing his trade entries and exits. He's been trading for about 7 years. His main focus is on trading supply and demand price imbalances while using order flow tools such as Bookmap and price volume analysis to successfully confirm each trade. Very nicely, concisely written here. Really like the outlook there with his trading. There's some links in here if you want to contact Carmine. He offers a course and mentorship here. I'll be putting this into the chat so you guys can click on the link directly. You've got his YouTube, his Instagram, and then also there's some Bookmap specials here from Carmine with his affiliate link. These are not available from the bookmap.com website. These are longer term special discounts that are only available through our affiliates like Carmine. Okay, so we just need to go through the disclosure and then jump right in and give it over to Carmine. A general disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's turn it over to Carmine here. Let me get his screen and we can get going here. All right. Okay. So Carmine, you're showing right now your candlestick chart. Is that right?
Yep.
Okay. Yeah, we're all set. So yeah, take it away, Carmine.
Cool. Thanks, Bruce. So for that, everybody who is watching the live stream from the Invest Trade community, welcome. And for those who haven't heard of me and are in the Bookmap community or just heard of me online, thanks for having me in here. And for those that do know me, my main trading style is based off of the supply and demand imbalances. And in this live stream, I want to go over basically how I trade these zones while I incorporate Bookmap, volume, market context, and different types of tools into my style to successfully take high quality setups. And it's very, very powerful. The minute that I ditched all other indicators and I really focused on, organic, true price action, along with really honing in on the mental side and the emotional side to trading, it really began to change. And I noticed a dramatic difference in my trading abilities. And I don't think a lot of people focus on the mental side or the emotional side to trading. And it's why they struggle. And I have plenty of videos. And I basically have a tree here. And I always view supply and demand as the tree trunk or the core to any trading strategy that I use. What I mean by this is at the bottom, the leaves, the stems, everything grows because of the trunk. And supply and demand imbalances and my supply and demand strategy is basically the core to everything else. In my opinion, and the traders that I have worked with over the years, everyone that has a lot of success in the market has incorporated some type of supply and demand, price and volume analysis in their trading. Now, at the top of the tree, I have Bookmap because everything below it could be seen or could be used with Bookmap. It's not a necessity. You do not need Bookmap to be successful. However, it is a tool to be used to add confluence to your setups or read types of information in the market which you can't really see anywhere else. I also have volume on here. For those that have been following me, you all know volume is a core component to how I trade. And in fact, if there is a lack of volume in the direction that I am looking to trade, or just a lack of volume in the market, I more than likely won't take a setup, or I'll just trade it with smaller size to protect myself. What volume tells me, and I'm going to explain all of these points into detail in this webinar, but what volume tells me is there's interest or participation in the market. And that is extremely, extremely important to any type of setup that I take. Market context, extremely important as well. Um, Basically understanding the participants in the market between buyers and sellers. The market's an auction place, just like, or I see some people are saying the sound is skipping. Everyone could hear me good? Is there an echo? Is it skipping and the video quality as well?
Yeah, I hear you just
Just
fine.
let me know in the comments before I continue here. Everything good? Okay. So market context is very important because it basically helps gauge the participation between buyers and sellers. If we're a buyer in the market, we want to know where other buyers are buying. If we're a seller, we want to know where other sellers are selling. And we want to know where traders have large positions, maybe smaller positions, where some traders are underwater, and just basically the underlying backbone to the market. Because if we are a participant, we want to know everything that's going on. Along with this is other order flow tools. I'm going to explain this in the video, and I plan to make more in-depth videos on these specific tools. However, how I view the market, other than this tree analogy, is it's basically the market's a storyteller, and us as traders, we are the readers. We have to read the story the market's telling us with as much clues or context clues as possible. And the more clues or the more pieces to the puzzle that we could add, the clearer the picture and the easier it is going to be to understand the story. So the more confluence that we have or the more tools, it's going to be easier to read the market and easier to take high quality trading setups. So this is how basically I trade my setups. I think this is very important. And a lot of traders who begin trading, I think, trade based off of a whim, or they just trade because the market's moving up and they think they have to be a buyer, or they see the market moving down, they think they have to be a seller. How I trade my setups and based off of reviewing my journal and the trades that I make the most amount of money on and have the most success with is based off of this formula. So I look at it as where plus when and why equals a trade. Now, again, I could really only explain how I trade in this webinar. Everything that I go over is based off of personal experience and personal trades. You may differ, you may not agree, but I can only explain what works for me, others in my community, and how I trade. So supply and demand imbalances basically give me my where component to this equation. This tells me where I want to be active, where my areas of interest are to be present in the market. These basically, I look at it as my advertisers to price. The market is basically, like I said earlier, it's an auction. It's an advertising mechanism to attract buyers and to attract sellers, just like any other market or just like any other auction. So my supply and demand zones basically give me my where component. These are zones, these are areas that I possibly want to be active. These are my areas of interest. I think it's very important for any trader to come up with a specific area of interest in the market. Now, the second part to this equation is the when and why. Price and volume give me my when and why component. When and why I want to be an active participant. It gives me my confirmation and it puts the final piece together for the trade. It's my validator to entering that trade. Without my advertiser and without my validator, my edge isn't present and I'm a spectator on the sidelines. So I must have my supply demand zones, possibly even support and resistance. I'm going to show you some examples with this in the video. I have a few live trading examples that I'm going to show you all by the end of this video. So supply and demand is my where, price and volume tell me when and why I want to be active. Without the two, I do not have a high quality trading setup. Now in this video, I'm going to explain in detail price and volume, giving me my when and why component. This is basically the confirmation aspect to it. And like I said earlier with the tree trunk example, market context, volume, Bookmap, other order flow tools with price and volume help provide this component. I want you to look at it as basically an arsenal. The more things you have in your arsenal, the stronger and the more powerful your trading strategy will be. How I use Bookmap. So we're on a Bookmap webinar and I have Bookmap up here. And everybody that sees this, if you don't know what Bookmap is, I briefly have to get into, what you're looking at. Some people are more advanced and know exactly what's going on here. But basically how I use Bookmap is I gauge the relationship between buyers and sellers. I gauge who's showing more effort in the market, who's showing more aggression, Who's more passive? Are there large participants? How's the speed of the tape? Speed of the tape is very important, especially if trading equities and stocks, Apple, Tesla, Amazon, etc. You want to see a very fast tape because what a fast tape tells me is there's participants active in the market, there's high volume, there's participation, there's interest. So fast tape is very important. And this is something that gets developed with screen time and experience. It's not something you could learn fluently through a book, reading something. Watching these videos will definitely help speed up the process. But your brain is like a muscle, and subconsciously we develop and gain strength by using that muscle and learning things that we don't know before. And over time, with screen time and experience, our brain muscle gets stronger to subconsciously recognize certain things that we may have not known in the past. So these are things that do get developed over screen time and experience. The goal with these videos is to kind of help speed up that process a little bit. So what I'm going to show you in this video on Bookmap, the first thing is a heat map. Now, Bookmap is a very, very good tool to basically show you specific components to the auction. They have many different tools, and it is all based off of organic price action. Nothing here is lagging. These are all orders coming into the market. We could see true intention. We could see fake intention. So the first thing I want you all to focus on here is the heat map. What this is going to show is yellow, red, orange lines. They are all passive orders which are on the order book. Now what this means is if we want to buy, let's just say Apple at $100, we can go put an order for Apple at $100 if it's currently trading at, let's just say, $105, and our order will appear on the order book, and this could be displayed depending on the color, our size, or true intention. So these lines basically right here are all passive orders in the market. Anything above price is a passive sell order, and anything below price is a passive buy order. The COB column is basically the depth of market, which is showing you the depth of those orders at that price. The larger the depth, meaning the more orders at that price, the darker the heat map will be. And I think I've seen red being the darkest color that we'll see. You'll see it in more examples later. Red means a very passive, large passive order. So those are the passive orders. That's the order book. And now we're going to see the bubbles. Those are basically aggressive orders. And everything we see that's green on the chart basically is an order that hit the offer, hit the ask, and it's an aggressive buy order. And everything that's red hit the bid, or it's an aggressive sell order. So the bubbles represent completed transactions. We could also see these on the time and sales. The lines represent the level 2. The bubbles technically represent the time and sales or completed transactions at that price. So it's the same thing as a level 2 in time and sales, just visually representing it, in a different manner. Now, we're also going to see on my chart specifically, like I said, there are many other tools you could use, but how I use Bookmap may be different than how you use Bookmap, and there's no right or wrong way to do it. There's no right or wrong way to even trade in the market. Your strategy might work for you, mine might work for me. So how I use these tools might be different, some might be the same. But what I have on my chart is a column called SVP. Now, what this is going to represent is a volume profile, and these are going to show completed transactions based on that price we're looking at. So just really quick, we could see a large, I have it split up between bid and ask, but at 39.31 on the S&P 500, there were 4,900 lots sold on the bid today, so aggressive sellers at that price. And on the offer, there were about 3,600 lots, which aggressively hit the market to buy. That is a session volume profile by price. And then I have a CVP, which is a chart volume profile, which is the same thing that I just explained, but it moves dynamically based on where I am looking at on the chart. It's chart volume profile. And it gets zoomed in by whatever range that you're looking at. Okay, now the most important thing to this video is supply and demand imbalances. I'm going to pull up Thinkorswim here again. And like I said earlier, these are all zones or areas that I'm potentially looking to be active in the market. So going back to the presentation here, a supply zone forms when supply exceeds demand and it creates a supply imbalance based off the candlestick chart. And a demand zone forms when demand exceeds supply, and it creates a demand imbalance based off the candlestick chart. So pulling back up Thinkorswim here, we're going to see a supply imbalance which formed earlier last week, back on Wednesday from this move to the downside, and we extend it and wait for price to retest this supply zone where it gives me my where area, and I use other tools that I'm going to explain in this video on to confirm this trade to potentially play the market to the downside, supporting with other factors that I'm going to explain here. Same thing for the demand zone. This one was formed, I want to say, over a year ago, so I can't go back that fast to this, but we look for areas to play long at the demand zone. They are all based off of price order imbalances. To help speed this learning curve up, you're going to look for areas of consolidation, basically where the market's balanced. What I mean by a balanced market is buyers and sellers are agreeing on price. You have an equilibrium between buyers and sellers. Some might be looking to buy at $1, some might be looking to sell at $1.10. We're in a tight consolidation range, and the market is balanced at this point. Now, directly before a large aggressive move up, we want to see this consolidation area, because this large aggressive move up, where the buyers really step into the market after that consolidation balanced phase, this is going to formulate a demand zone. Same thing, but flip it for the supply side. You want to find an area where the market consolidated, where the market was balanced, there was an equilibrium between participants, followed by a very aggressive and violent move to the downside, which is going to validate supply zone. Area of consolidation is where the imbalance was created. It was an area where buyers and sellers agreed on price beforehand, and then either buyers took aggression for demand or sellers took aggression for supply. Going back to the chart, we had an area here where the market consolidated. We had an aggressive drop to the downside. Fast forward 2 days, the market hit the supply zone, gapped down the following day, and stayed below it the rest of the day. I could pull up NASDAQ here instead of always looking at the S&P. I can maximize this. And the same thing in this area. We had a consolidation area followed by a very sharp drop to the downside. And look how many times this acted as resistance and provided nice short setups. So this is the origin. The following day we hit it, we sold off. I'm going to show you an example of how you could take a potential short position at the supply zone. Then the following day, look what happens. We open up right at it. We put a lower high intraday and we sell off. We reject with heavy selling pressure. Then fast forward, overnight, hit the zone, we sell off. Then the following day, we hit the zone again, we sell off into VWAP, and we bounce, putting in a double top and selling off before the market does close. Again, these zones are not magic. They don't work all the time. They are just areas of interest. I've seen many zones get destroyed. I have different rules for different markets, uptrending, downtrending, volume, and things of that nature. So just because you're seeing a clean zone like this, that's rejected 3 times, doesn't mean all of them are this clean. This is just a very good example in the past 3 days with 3 different short setups, and the same thing for the demand zone. So they're not magic. They sometimes get destroyed, but as soon as we break through a zone above supply or below demand, I remove it. Now, you could also, this is how I play it, or how I view this. So you play a retest at that origin of the imbalance. It could be yesterday, it could be today, it could be next month, it could be next year. It doesn't really matter as long as we didn't break that full imbalance. And the reason for this and how I view it, number one, is orders must get filled that didn't get filled the first time. In this consolidation area, because of the market moving away from that consolidation area in a very fast and aggressive manner, sometimes some orders did not get filled that were looking to passively get filled the first time. So we can look for a retest for those orders to get filled, and that's when we get a bounce at demand or a rejection at supply. Or another way to look at it is traders buy based off of value. If we have a supply zone, we might have sellers agreeing that this is very unfair value. So every time the market comes into this area, this unfair value, sellers step back in and the market moves back to the downside. You can look at it however you want, but the main point here and the end result is the zones are very powerful and they work extremely, extremely well if you focus on the right things. Now, going back to that tree example, remember I said about market context and volume? This is very important. Like I said, you want to put more pieces to the puzzle together to form a picture. Intraday context, market context, basically the relationship between buyers and sellers factored in intraday, or just a larger picture. What I mean by this is the example from Monday, yesterday, the market moved up, and this consolidation area right here actually formed demand. Then we moved into that supply zone that I showed you before, and the market pulled back. Now, during this pullback, in the back of my mind, and how I want you all to trade like or think this way, is the market moved up, the pullback is imminent. However, there are tons of new buyers which formulated this demand zone over here that if the market does pull back, we want to see buyers defend this area. Either number one, their positions get filled that didn't get filled the first time. We could use Bookmap for this. I'm going to show you a perfect example of something that I'm testing. Or we could just say that buyers want to defend this area because they agree that this is their fair value and the market may hit this value, bounce off of it, and we could take a potential long trade. So I look at zones as context. Where are buyers or sellers factored in at? Sometimes I don't even take a trade at a supply or demand zone, but I use it as a piece of information to take a setup based off of what I'm seeing form intraday. More on that. I'm going to show you an example of a trade that I took, exactly what I just said there. But sometimes we'll hit supply, and I don't even take the trade at supply. I wait for some type of development to tell me, okay, sellers are factored in at supply. Let me find an area where I could play the market short. Point number two, like I said earlier, volume is extremely important. If I don't see volume, I probably don't even trade it. You could ask the members in my Discord. Volume is the number one most important sign to my trades and even to my thesis. And if I don't see it, I most likely won't take a trade, or I'll trade with very small size. So I need to see volume. Does it support my thesis? Am I on the right side of the market? And there's two ways to look at volume. You can look at it by volume by price or volume by time. This is what I mean by volume by time. As you can see down here, I have a custom buy versus selling indicator on Thinkorswim. Volume was pretty much non-existent, very tight, very small. Even in the morning, there was nothing significant when the market did open up, when there is usually higher volume. And we could relate volume to volatility because usually lower volume, not all the time, but most of the time, usually lower volume brings lower volatility. And a lack of volatility means there's lack of participants in the market, especially larger ones, which we want to be on the same side as. So if there's not a lot of volume, most of the time it means there's not a lot of volatility. We could tell this by seeing if the market's balanced, how are highs or lows being reacted to. Are we seeing continuation above a high? Are we seeing continuation below a low? Just how is price action developing? Are the candles basically painting in slow motion, or is the market moving in a fast manner? These are all things that I look for, and they play a very vital role in every single trading decision that I make. And like I said earlier, it's not something that you might look at this chart and say, what is he talking about volume and volatility? But for me, this chart is we're breaking the highs. We're not seeing a lot of continuation. We're moving down, and we're in a very tight range where, the market basically is not doing much. Yeah, we're hitting demand. Yeah, we're hitting supply, but there's not a lot of volume and there's not a lot of volatility. Now, also, I'm going to show you this example. This is what I mean by volume by price, because on Bookmap or other order flow tools, you could use a footprint chart. You could use a standard volume profile, but I like Bookmap because it has a volume profile integrated in it. We're going to see large participants basically trapped at a high. So here we have basically on NASDAQ 210 lots, which aggressively hit the market at the high, got absorbed by this passive seller. Now we have a very large trapped buyer at the high and a very large passive seller at the high, over 210 lots at that price. So if I'm buying something, or I'm a buyer, or I'm a bull, this is very concerning to me because we hit a high without looking at any other context. you're going to be surprised on the candlestick chart, what I show you what this looks like here. But we see a very large aggressive buyer at the high, yet there's no continuation to the upside. So that's very, very concerning to be a buyer at this point, especially with such a large buyer trapped at the highs and the market moving down, putting pressure on this buyer. I'm going to explain that more into detail with the lesson later on because I took a trade off of that analysis. But point number 3 is, what are related instruments markets doing? Do they support my analysis? And I must recognize inherent weakness or strength in the market. I think this is very key. And it's a tool that is slept on by a lot of traders because sometimes they get so much tunnel vision of what's in front of them and they ignore not only the larger picture, but they also ignore what their related markets are trading. If I'm trading the S&P 500, I want to see what Apple's doing. I want to see what Tesla's doing. I want to see what Amazon, Microsoft, Facebook. I want to see what all the other market-leading equities are doing. Do they support my analysis, or am I fighting the trend? And I must recognize this weakness or strength, and it gives me a very good piece of information to kind of support this. Here's an example. On the left, we have the S&P 500, and without looking at any other tools, we're just looking at a candlestick chart. This market sold off into the demand zone and found a bid. We rallied out of this a decent amount. Rallied, 60, 70 points off of the zone. At the same time, Apple, a major market leading equity, came into demand and also found a bid. Nice volume building into the market. And in my Discord, I said the market could bounce at this 407.2 demand. Apple coming into a key demand zone. And if this level fails, it could bring more blood. But if we catch a bid and Apple bounces off demand, it's going to help support not only this demand zone to bounce, but it's also going to help support buyers being factored in to raise the S&P 500 and rally out of this zone. Another example, here we have NASDAQ on the left and Tesla on the right. NASDAQ opened up, sold off, had some nice lower wicks inside of this demand zone, some nice buying pressure, as you could see in the first 3 candles, the second and third one, and bounced off this demand zone. At the same time, look what happened with Tesla. Tesla sold off, and the charts look identical. So very identical charts. Then we dip back down. Tesla finds a bid. We rally end the day after hitting the demand zone. So this isn't a necessity. You don't have to look at the equities, but sometimes it gives me more confluence. It adds more context to my setups. And it provides an extra piece of information to any type of analysis that I'm looking to do. It's very, very vital. And like I said, the more pieces to the puzzle you could add, the clearer the picture and the higher quality setups that you're going to take. Let's see what else we got here. And then putting the pieces together. So this was a setup from today. I did not take this setup, but I know a bunch of members in my community did. And the analysis is the same across the board. I'm going to pull up the S&P Bookmap here. And this was from the pre-market plan. Let's see over here. So we had a nice clean break above our level. We had some nice passive orders looking to get filled here. And I'm going to break down exactly what I saw. The first thing I want to show you all is, pull this up here, the pre-market plan, just to show you the levels so you could understand the context backing the setup. Pull this up here. Okay. I don't want to get rid of this thing here. Okay. So the S&P 500 volume is dead. I will pull that up after. So essentially what we were looking for was a break below 3908 on the S&P 500. This was a level from the day prior. This was something that we bounced off of yesterday, and this wasn't necessarily a demand zone. However, it was an area that the market found buyers the day prior. It also was a gap from the weekend. Found buyers at it yesterday, found buyers at it overnight, and what we were watching for was the market to either hold above 3908 to play long or sell off and break 3908 to play short. What happens here on Bookmap is the market comes down. I'm going to pull up the PowerPoint again. Break below 3908. The target was the 3875 demand zone. Pull this up again here. That 3908 support level from yesterday's holding overnight, we're balancing in between and above. It's hard to be bearish above this level for continuation. And if we could successfully break 3908 and the market leading equities continue to sell off, I'll be open to playing puts or playing short, first targeting 3875 demand and then the 3835 demand zone to the downside. So what we're going to see here before I show you Bookmap is we're going to see some large passive buy orders at 3918 and 3908. Now this could be a true buyer in the market loading into a very big long position, or it could be a seller closing out his short position. So what I wanted to see today, pulling up Bookmap here, is what my thought process was as we were coming into this area. We also rejected supply. Was I wanted to see this buyer get filled his large position, whether it be a short closing out his sell order or a new buyer factored into the market. I wanted to see this buyer get filled and the market to go up past this aggressive sell order that we saw earlier in the day at 3926. In fact, in the Discord, I was watching to play the market long off of this level if we could get above 3926. We never did, and this validated that this may have been a short closing his long position, because if it was a true buyer, all of these passive buy orders would have got filled. They got hit by aggressive sellers. The market would have came up because this large buyer would have shown effort to bring the market higher. The market moves based off of effort versus reward. If I'm watching a level, I want to see this level hold and buyers show effort to bringing the market higher. We could have targeted the supply above. In fact, that's exactly what I was watching. Going to a 1 minute chart, this is what it looked like. Market sold off. Basically, this is where the passive buyer was loading into his position or closing out his short. And I wanted to see the market get above this aggressive seller at 3926. We failed to, which made me not play the market long and which validated my point that this may be a seller closing out his short position, which is just going to help fuel the market lower because the market cannot sustain on shorts covering. It could only sustain on new buyers in the market. And how I view new buyers is if demand does form on the way up. So then the market got to 3908, and this was the cleanest setup of today. We get below these passive buyers, and this is something that you want to see if you're scalping on Bookmap or just reading the tape. Here we have our 3908 level. We get below it with aggressive selling prints. Again, red bubbles are aggressive sell orders coming into the market. We hit a very large passive buyer. He gets filled. Then the market comes up. 3908 now is acting as resistance. We get below it. More aggressive sellers coming into the market. Come back up. Look exactly where we reject. 3908. Come back down. Then we see a very weird bracketing order over here. 3908, we're still below it. Then boom, we crack 3900. Aggressive seller comes into the market, and we have a free fall, consolidation, more aggressive prints coming into the market, all the way into our 3875 target, which hit perfectly. So that's an example of showing you the aggressive selling that you want to see if we're breaking below a demand zone or breaking below a key level or something in that nature, indicating that sellers are more aggressive in the market. You add on the context that not only did we reject supply, but we're also not forming new demand and sellers are aggressive, and it gives you a high quality setup, and it hit our target at 3875. I wish this was a demand zone because this bounced off of it perfectly, and I wish it just wasn't an area to scale out of a short, cover the shorts. I wish this was an area to get long because we hit it, and then we hit the supply zones 3 different times from this drop. So this is the consolidation area right here. This drop validated a supply zone. We wait for the market to retest, and later in the day we hit the zone and reject. Show you what it looks like on Bookmap over here. All day 3930 acted as resistance, and as we came into the zone, some large buying into it. You had a very passive seller up there, basically stopping price from moving higher. Market pulls back from it, and then all afternoon, every time we came back into 3930, we rejected and sold off multiple times from it, and we hit it end of day and closed higher. So that was the setup from today, and I also want to show you a setup. Aggressive selling hit the market, removed liquidity. Bookmap broke below 3908. This validated confirmation to become a bear and play short. Strong selling until 3875 target hits. Now, another way I use Bookmap is to view trapped participants. This is very, very key. I want you all to think a little differently than retail traders. 90% of them fail. So put your mindset and your perspective in not that retail trader mindset and understand the true auction of the market. So how the market works is we move up until the last buyer buys and the market moves down until the last seller sells. That's how any market works. It's whether you're talking about a car market, real estate, stock market, whatever. The market moves up until the last buyer buys and the market moves down until the last seller sells. When I see a large buyer trapped at the high, especially at a supply zone, and there's no follow through to the downside or to the upside, it's a very strong sign for a potential short-term reversal. Now, what I mean by this is whatever the market's going to do, whatever it takes to put a large buyer under pressure, force them to close their position, causing more of a sell-off. Large trapped participants recognize this and they put that participant under pressure. However, if that participant continues to put pressure on the market, then we may see continuation in that direction. What I mean by this is NASDAQ from yesterday. NASDAQ from yesterday, I'm going to actually pull up the NASDAQ chart here. And this is based off of that key supply zone that I mentioned earlier. We hit it 3 different occasions on 3 different days and sold off on it. So obviously an area where sellers are very strong. They're holding the market down. It's tough resistance and extremely strong supply. Then yesterday on Monday, May 23rd, 2022, the market had a strong rally, making higher highs, making higher lows, and we hit that same exact supply zone at 12.045 and 3/4. Now, what this looks on Bookmap, the example that I showed you earlier, is we're going to see a very large trapped buyer at the highs. When you add on the context of we're at a supply zone, it makes it a higher quality of a setup. If I seen this large buyer at the high randomly and not at a supply zone, yeah, I might have taken the trade, but it just adds more pieces to the puzzle, gives me more confluence, and makes it a higher quality of a setup. So the market came up into the supply zone, a very large passive seller. This is on NASDAQ. And 200 lots is decently heavy size. It's actually very aggressive size on the NASDAQ. Came into the supply zone, hit the high of 12.050. The market moves up until the last buyer buys. We have a very large trap buyer, over 238 lots at the high. And now the market recognizes this. And if we are below this area and the market puts in lower lows, lower highs, and we put this buyer under pressure, the market is going to continue to sell off because it's going to force this guy to close out his position, sell his long position, and that's just going to cause a further sell-off in the market. Same thing for the flip side. If we see this on the demand side and we see a large seller trapped at the lows and we're doing everything to put him underwater and put him under pressure, it's a good sign the market's going to reverse to the upside. However, for the supply side and at the supply zone, we have a large trap buyer. Market does everything we could to put him under pressure, and we got a clean sell-off from this area, about 40 or 50 points from that. The market also puts in a lower high. We stay below this area. Then the market comes back down and dips even further, and this provided a nice high-quality setup on NASDAQ just off of this supply zone. Nice double top going into the end of the day. So this is just using different tools to validate some trades at a supply or demand zone. But ideally, you want to put him underwater because he's going to start sweating. If you're a large buyer and let's just say you're long, right? 200 lots, someone could do the math on NASDAQ. That's a really big pocket. If we're long up here, really, really large size, and the market starts coming down, we're going to start freaking out because our position is underwater. And that's just going to cause a further sell-off, especially when we double top and pull back from it. So trap participants, very, 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 very key. So now I'm going to show you some live videos. These are all trades from the past. Some I've taken, some are just based off of analysis. But I got 6 good setups of live recordings on Bookmap. So putting the pieces together so far. And one thing I do want to mention is support and resistance is different than supply and demand. They are different topics. I have a video of this on my YouTube. People get these confused. Supply and demand is different than support and resistance. So here, this was back in, I want to say, January. The market was downtrending, putting in lower lows, putting in lower highs, and we had the FOMC meeting on a Wednesday, and the market sold off from this FOMC meeting, formed supply at 4,412. So now we got a supply at 4,412, and the next day the market sells off, it formulates demand in this area, and rallies back inside of this supply zone. Now, what's key here is not only was it done on higher volume, it was from FOMC and it was near a high in the market where obviously large participants are active with FOMC from this large drop. I mean, this is a 160 point drop on Wednesday right here. The next day we form demand and come into the supply zone and we sell off from it. Now, what this looks like is intraday perspective. This is the same supply zone at 4,412. Is we see a nice rally inside of the supply zone. We form a high, we dip down, and then we break the high, which is a failed high a day breakout, and we start moving lower. And then on this move lower, we see a wedge and we market starts selling off from this. And I said in the pre-market plan, I post pre-market plans in my Discord every single day. And in the pre-market plan from January, I said we had key supply at 4,396 and 4,412. This can very well reject and will be on watch to find selling activity to play puts. So now here's a live recording of what we could see on Bookmap. And what I want to show you all here is as the market comes up into that 4,420 area, we're going to see a very large passive seller get filled. Gets filled some here, then the market comes up. There's some aggressive buy orders that come through inside of supply. At this point, we're breaking above the high a day. So if we have a high a day or a low a day, you want to see increasing volume above that high or increasing volume below that low. Increasing volume on a breakout usually means continuation. And if you see us break a high and there's lack of follow through and lack of volume, it's a good sign that we're going to see a rejection. So as the market came up, broke the high here, what it looks like on the chart is right here, came up, we broke the high, sold off, then we start selling back down. The key point I want to make here is as we break the high, offers step in. So now we have 4,420, we have some trapped buyers at the high, the market sells back down, and as we start moving lower, now this book kind of flips, and there is a seller basically reloading his position from earlier and forming a big area at 4,420 that the market's going to have a hard time getting above. Offers step in, and as long as now we recognize this, my job is to find prints intraday that sellers are removing liquidity from the market, stepping into the market aggressively, and then it's safe for me to personally play the market short, play SPY puts, whatever instrument you trade in this case. And as soon as you see aggression here, you could get short. Your stop is above the high at 4,420. You're risking about 7 or so points. And I forgot where the nearest demand was. But then we come back into 4,420. And look, it acts as resistance. Come back into it, 4,420. Another large buyer gets filled. Acts as resistance. Aggressive prints coming through. And we're about 20 points off the high here. And then we get a sell-off even further with more aggressive selling prints coming through. So it's just recognizing at supply at this point, some trapped buyers at the high, a very large passive seller showing his intention there, and then aggressive participants coming into the market after that passive seller shows his intention to the downside, and then it's safe to play the market to the short side. Then I didn't get a recording of the wedge break. But we also broke the wedge, and you may have looked to play the market short there as well. Another setup was a demand bounce, and then we retested this level. So essentially what we're going to see here is this is the FOMC drop. This was the next day. We have the FOMC drop, which formed supply to the downside. We have that demand that formed. Here we have that wedge and that failed high at daybreak. Then the following day, we sell off into this demand zone pre-market, and then we start moving up. This area right here where my mouse is moving over actually formed new demand from this move up right here. Then the market pulled back, bounced off of this new demand, which is already inside existing demand, and found a bid. Looking at a intraday perspective, I don't really remember, this was back in January, what I saw that really screamed algorithmic. But not always. I said this leads to a reversal. And I was watching for a 4,300 break to scalp into VWAP to play to the upside. And this is what the picture looks like intraday. Market opened up, hit this demand zone, bounced out of it, and actually formed new demand. So looking what it looks like on Bookmap now. Again, everything's going to come together with all these examples, everything that I've been explaining. So the market sells off. We have demand at, forgot the number exactly. We got demand at 4296. So now we're inside of this demand zone. And what's interesting here is look at how the market basically is bracketing inside of this demand zone. So we're in a very tight consolidation range. And I think this is where a large participant basically was leveraging into a large position or trying to get filled. And as long as the market can move back above this 4,300 mark, which was not only the consolidation high, but it also was a whole number with large passive sell orders on the offer. As long as we could get above that, then we could expect a quick move up because we are at this demand zone. So this is what it looks like on the chart right here. Basically consolidation. And then on Bookmap, this is the consolidation that we just saw. Then the market consolidates. I think we break. Okay, then we pull back into 4920 or 4290. More passive buy orders get filled. Aggressive sellers are hitting that order. And we're consolidating in this range for like 15 minutes. Then we break the low and aggressive selling prints come through. Remember what I said earlier. If we're breaking a key level or a low or a high, you want to see follow through in that direction with that participant that broke that area to keep putting pressure on the market. In this case, we got below the low, we broke below it, more selling comes in. And what's interesting here, and really what kind of put the cherry on top of this analysis, was as soon as we broke the low, not a second later, a passive buyer basically was acting like a floor down here as soon as that sell order got filled, which made me think that there was a very large buyer looking to get filled the position. And as long as we could break above that 4,300 mark, I was open to playing longs. We break above it briefly, we pull back. Now, depending on how you trade in your analysis, even if we pull back into this range, our analysis is still not proven wrong, especially with the buyers basically defending their position. More buy orders get filled. And then watch what happens when we break 4,300 after even more buy orders get filled for about a 30-minute period. Aggressive buyers come in, and we played the market long targeting VWAP, which I think VWAP was 4,314. It was a quick 14-point scalp. We identified very aggressive buy orders coming in above 4,300 with the context that I just mentioned before of a buyer loading into a very large position. And that context, along with those aggressive buyers on the break to the upside, kind of validated the setup. And we got that clean pull rally into 4,312. And I think VWAP was 4,312. Yeah, VWAP was around 4,312. We got even a further rally to 4,340, but you followed your plan and you stuck to your targets. Yeah, we got a even further move up to 4,312. But there's another setup with this. So what I just explained before about that large buyer basically getting into a position, this consolidation area and that aggressive prints above 4,300 basically validated that this was a demand zone to the upside and it was going to form. If the market pulls back, it's safe to say we have new buyers factored into the market around that area, and we want the same buyers to defend this position, not only because we have new buyers factored into the market and new demand, but we also have a bounce out of the old existing demand zone that formed in the pre-market. So then as the market pulls back into this 4296 this area, this was around 1030. Look what happens on the tape here. Passive buyer shows up, an aggressive seller hits his passive buy order. We start consolidating more. We pull back into this range, right? 4296 is where this area was, around 1030, 1045. Right here. This was 1030, 1045 when we pulled back into this range. and watch the aggressive participants come into the market. Watch this move. See how we start having aggressive buyers come into the market? With the previous context and the current tape, I'm okay with taking the market long, stop below that area where that buyer found value before, and you could get a quick 40 points scalp to the upside. I'll take that all day long if I'm risking, 8 points or 10 points in this case. Okay, here's another setup. This was also an interesting one. So this was back in January as well. And what we were watching for was a sell-off into this demand zone. Actually, no, this is the exact setup that I was just explaining before, just on a smaller time frame. So here's that consolidation area. This is off of a 1-minute chart. This is where the new demand formed. This is the rally that we took out of 4,300 earlier, right where my cursor's at, scalping into VWAP for a quick scalp. Eventually, the market pulled back down, and this consolidation area from earlier, where we saw that strange buying activity, was defended, and we retested this buyer. He proved to be strong, and this is where we saw those aggressive prints coming into the market. We broke above that wedge. We had some nice volume coming into the market, and we could spot this all aggressive orders right here. See those aggressive, very large green bubbles? That's supporting our thesis to the upside. And in the Discord, I say a possible trade scenario I'm watching for is the area to hold on a pullback, 42.99 to low a day. If this does not hold, I'm not interested in longs, as the market will either balance or sell off. We pulled back into this 4299, and we found a nice rally out of that area. Okay, this was another setup, and this was a very, very interesting one because this was extremely large size. So let's see what we got here. So we had a very large trader basically defending his position. The S&P hit this demand zone, bounced out of it, and it looks very similar to the setup I just explained earlier, where we pulled back and we retested this area and found a bid off of it. However, on Bookmap, and again, you could use other volume profile tools or other order flow tools. Don't have to use Bookmap. We could see on the volume profile here a 3,600 lot seller or buyer, at 45.35. And what's interesting here is that's a very large discrepancy because what hit the bid at that price was only 660, and then a tick below that was only 1,500. So this is a little bit of a discrepancy. And how I basically read the tape or even Bookmap is I just look for things that are unusual or weird or out of the ordinary. And I see how I can relate that to my analysis, put myself in the perspective of whatever participant that person is, whether they're a buyer or a seller, and I figure out how I could trade on the same side as them or where they're going to be in the most pain. Because those two pieces of information right there, where they're going to be in the most pain or where they're going to be the most rewarded, gives me a really serious edge in itself. So in this example, we had a very large buyer at some point earlier in the day at 45.35. This also aligns with a demand zone which started at 45.38. So at 45.35, we have a very large buyer. And what's extremely interesting here is I want you to keep a note on the size. So right now it's 3,600 lots. What we're going to see here is as the market pulls back down into this 45.35, there isn't any passive buyer shown on the heat map here or the level 2, basically providing the liquidity to hold the market above 45.35. So watch what happens here. We pull back into 45.35, and there's going to be some aggressive sellers hitting the market, yet there isn't a passive buyer basically there to support the market at 45.35. And we come into this level multiple times. Here's a second time. He's at 3,700 lots. We defend it, and I think we pull back in it one more time. Yep. We pull back into 45.35 one more time. There isn't a passive buyer here, yet the market could not get below 45.35. So I don't know if it's this buyer doing whatever he wants to do to defend that position or if it's somebody else, but we really could not break below 45.35. And if I'm recognizing this intraday and I'm seeing this weird discrepancy of look at this price action. I mean, just we're hanging out here at 45.35 and we're not selling off after such aggressive prints. And every time we hit it, we try to move up. So when I see that, I recognize that. And with the context that we are at demand, this gives me a solid setup to potentially play the market long if we start seeing aggressive buy prints to the upside for more risk, but a better probability of it working out. Or I could even get long with this guy, basically trade with him, but that's a little bit of a lower probability, but the risk will be extremely tight because we're getting in, 5 or 6 points lower. Then we see the prints start coming through. We pull back down. And look what happens. Pulled right back down into 45.35-ish, 45.36. Again, he's doing whatever he could to defend that position. Then aggressive buy prints come through. And the market has a clean rally as soon as we spot these buy prints. I'll let this play out so you can see them form in real time. Here's 45.35. Here's that large buyer. And here we got large prints coming through. It validated that trade off of demand. And it gave us a nice setup to play the market to the long side. And then we hit a high at 45.56. We pulled back, and look what happens. He defended his position on that pullback. The market came back up solely off of a large buyer defending his position, 3,800 lots. Someone could do the math on that. And at the same point, to give it more confirmation of exactly what I said earlier, Tesla, a major market-leading equity, and NASDAQ also bounced off demand with it. Tesla hit the demand zone, strong buying volume, caught a bid off this demand zone. Whether you trade Tesla itself, go for it. But if you're trading a market-leading equity or a market-leading indice, ES, NQ, if we see this type of action on Tesla, and this day Apple did the same thing, Microsoft did the same thing, and it gave added confirmation to take this market long. So we got 3 pieces of information here. We're bouncing off demand. We got a large buyer defending his position. We got a large buyer in the market. And we have other market-leading equities bouncing off demand as well. Gives us a nice trade. Now, this was a losing trade. I remember taking this setup, and in my opinion, was a really bad setup. Yet, I let my emotions get involved, and I took a trade that I should not have taken, reviewing the chart after the fact. But everything looks good in hindsight. And in my opinion, I think this was an emotional decision, and I should not have taken this trade. But essentially, what we're going to have here is the market dips into this demand zone, and we rally out of it. And we come into supply at 4055. Now, what's important here, and my mistake, is I take the market long inside of supply. I should have never done it. I don't know what I was thinking here. But what we're going to see here is on Bookmap, we're going to see a very large seller at 40.50. And as you can see, as the market's coming up to 40.50, we basically have a ledge right here, right? A lower volume above it, higher volume below it. There's 4,700 lots getting absorbed on the offer, which means there's 4,700 lots so far today at 40.50, which is not bringing the market higher. So what that tells me is there must be a seller passively selling to all those aggressive buyers over 4,700 lots at that level. So what I was watching here for, and my mistake was, I was looking to play the market long if we could get above 40.50. Now the mistake here was I did not recognize we were at this supply zone. I got no business taking the market long at supply. However, I expected us to keep bouncing or keep rallying off of this supply zone and invalidating it because we did bounce off of demand pre-market. However, watch what happens when we break above 40.50 right inside of supply. Watch what happens here. So not only did 40.50 act as resistance, the offer stepped back in after a large position got filled. The market moved back lower. Aggressive prints came through. I want you to see what happens at 40.50. Now we got 40.50. Now we got 5,300 lots at that price. Now we got 5,700 lots. Now we got 6,000. And look what happens. An offer reloads here. Now, 2 ways you could look at this. You could look at it as, hey, let's play the market short. We're at supply. We're putting in a lower high at supply. We obviously have a true seller in the market. And if we do break the high, give it a little wiggle room to break, attract a bunch of longs, and then dump the market because we are at supply. Remember what I told you guys earlier. Think differently than retail. If we are at supply, think of ways to play the market short instead of playing long if sellers are present. If buyers are present, it might be a different story and you might want to avoid the short and focus on longs. However, my stupidity is I was looking to take the market long above this supply zone or above this 4050 seller to put him underwater, and I didn't give it enough wiggle room. At this point, we got 6,700 lots at the offer. It just keeps getting absorbed. We're failing to break above it. This is a red flag if you're a buyer. And like I said, if we break above it, give it wiggle room, let it attract longs. Longs buying inside of supply is a recipe for a reversal. The market needs our liquidity. If 90% of retail traders lose, 90% of retail traders are giving their liquidity to big money who is basically on the other side of their trade doing the opposite so they could use our money to get a gain, fill their position, and gain liquidity in the market. So then the market broke above 4050. I took the market long right here. Right as we hit the supply zone at 4055. Never got above 6 to 8 points, which basically shows acceptance of that level. A seller basically got filled. An offer stepped into the market, and this was a major fake out to the upside. The offer, when we got back below 4050, got back in and showed more intention over there at 4050. Then the market dipped, and I stopped out of this position. I should have waited, and I should have not thought like a retail trader, although I have taken setups like that, which have worked out before, but it was a perfect supply rejection. And how I view this is a bunch of retail longs got long above supply, inside of supply, and after a large seller got filled the long position, then we pulled back into this demand zone, and we actually found a bid off of this level. And then here's actually a picture of that seller. 7,500 lots, aggressively bought above 4050, broke above it. I like to give my trades about 6 to 8 points of wiggle room to basically show acceptance of that level, and then if it brings continuation. 4 points is a test, 6 points is a acceptance, and then 8 points is continuation. In this case, we broke above 4 points. This level got tested, and I really should have been looking for ways to get short instead of long, but I reviewed it, and now I know and I'm prepared for a future trade at some point in the future. Okay, here's a setup. I don't have a recording for it. However, this was in the Discord. This was an intraday commentary. This is basically where I update my thought process throughout the day. We're watching a bounce out of this demand zone, but instead of getting long, this was at the same point that that example I just showed you earlier with the absorption at 4050. Came to the demand zone, and we were watching a break above 3390, 3990, and 4000, and it should bring us for a move into 4013 and then a move into 4030. I took the first setup, was a losing trade, right? A lot of people after a losing trade put their head down. They freak out. I'm red on the day. I don't want to lose any more money. I'm not mentally prepared. If I'm down 500, I don't want to lose 1,000 if I take another wrong setup, right? Sometimes the best setups happen after you stop out. So if you stop out of his position, don't put your head down. Look at ways to focus on another opportunity because there's always going to be opportunities in the market. A lot of people take a loss, they get frustrated, they shut their screens down, and 5 minutes later, they miss out on a crazy setup that they could have made back their loss and then put more money in their pocket. This is a perfect example. I took a losing trade. Instead of walking away, shutting my computer down, I focused on another opportunity, and we took the market long above 4,000 into 4013. I don't have a live recording of this, but look what happened at 3990 and 4,000. Look at the aggressive buying coming into the market. Brought us a move into 4013, and later in the day, it brought us into 4030, which was our target. But this is the type of buying you want to see if you are playing a breakout or if you're trading on the same side as buyers. This is the exact type of action that you want to see. Now, here we have a lower high at supply and a break of 4,000. This is another nice setup. I got one more after this. So here we have a lower high at supply. Lower highs basically just show that buyers fail to provide more fuel to the fire to bring us past the previous high. When we see it at supply, it's a very bearish sign. But instead of getting the market short at supply, remember what I said earlier. Sometimes I don't um, sometimes I don't take trades at supply. Sometimes I just use it as context. And in this example, we hit supply. I did not get short at supply, and then the market started moving down to broke below support at 4,000, and we saw aggressive prints to the downside below 4,000. I want to show you what this looks like right here. So we hit. I don't think I have the supply rejection, but I do have the 4,000 break. So again, we have a lower high at supply. If we fail to hold and VWAP and break below 4,000, I may look to play short. There's not much stopping us from selling off into 3,985. So a lower high was put in. We were watching for a break below 4,000. If we can confirm it by the tape, targeting 3,985. Watch what happens as the market breaks 4,000. We have a large passive buyer there. If we are trading this, we got aggressive prints coming in before the break, and then we got more aggressive prints as we break through this level. Consolidation, and this was just a clean, fast sell-off below 4,000 for a 15-point scalp into 3,985 target. Bids stepped in, so you can see down here. Here's the aggressive break below 4,000. Large red bubbles coming in. We hit our 3,985 target, and you move on from the setup. That's all you got to do. You come up with a plan. You sell your position if your target hits or your stop loss triggers. Anything else is noise. You have to follow a plan, create a plan, and stick to that plan. And then this example, this is the last one. I made a video on this on my YouTube a while back, but basically very strange action here on the lows of the S&P 500. What was interesting here, and again, this is what I mean about looking at the tape to spot different things that might be out of the ordinary or a little weird. And in this case, at every $1 or 1 point increment, there was a sell or a buy order passively for, I think it was like 150 or 200 lots at every $1 increment for 10 points. So right there, that was a little too clean, a little too smooth, and something you don't see very often at exact increments for the same size. So then the market started selling off, and these buyers got filled. Or this large one order, we could call it, got filled. I'm sure it was one participant. And remember that first example I mentioned earlier about, this could be a short closing out of a position, or this could be a buyer looking to get long something. The move after the action will explain what it is, because this buyer or this seller is going to do whatever to influence the market. So in this case, this large passive buyer, I don't care if it's a short, I don't care if it's an actual buyer, gets filled his position. Also had a very weird bracket order. And this order gets filled. Now, there's two ways we could play this. See if I have a good example of this. The first way is recognize this and speculate that new demand is going to form. The example I told you earlier is moves to the upside cannot sustain if there's not new buying in the market. So when I see this and I see aggressive prints come to the upside and I see aggressive buyers step into the market, I personally view it as new buyers in the market as long as this area could hold. So you could play it the first way of speculating that new buyers or new demand is forming, get in when we start to see aggressive prints come in, or you could just wait for a retest and wait for demand to form and play a retest speculating that this buyer is going to defend his position. And later in the day, not only did we bounce out of that area, but look what happens. The market pulls back, and where this strange algorithmic large buyer, large seller action was, we pull back into it, bounce out of it perfectly, and rally about, 40, 50 points from that area. So you could play it long, speculating that it's going to form right here, or just wait for a retest. Retests are obviously better. They provide higher quality setups. And I haven't done enough testing yet, but that type of action may formulate stronger demand zones because later in the day, we pulled back into that area. This is what it looks like on a candlestick chart, and rallied from that. So that was just a large bracket buyer / algo, however you want to view it. And that's just how I view the market. So that's pretty much all I got on my end. It's just combining supply and demand. You could use any order flow tool. You could use Bookmap, but volume is very important and market context is very important. Bookmap just kind of adds the cherry to the top of the cake. Time and sales level two, it doesn't matter what you use. The premise is supply and demand is very powerful when you combine multiple tools and when you focus on organic price action while maintaining your emotions, coming up with a plan, and trading your edge or your strategy. Every setup that I take and I lose on, 90% of them, 80% of them, um, basically are trades that I did not trade my setups or what worked for me the best. And there's nothing more frustrating than taking a setup because I expect something to happen in the market, up or down. I think it's going to go up. I think it's going to go down. And we enter a trade based off of that thesis. There's nothing more frustrating than a loss that way. But if you focus on your setups, you trade your edge, and you're very patient for your setups to trigger, then you'll have a lot of success in the market. But you also must master your emotions, maintain them, and focus on psychology. So I'm going to leave you all off on that note. I hope this helped. Definitely check out the links in the description below. Follow me on Instagram. I'm open to any questions there. Um, and check out also the link to the course in the description below. And if you're interested in Bookmap, they hooked me up with a discount code for you guys. Let me know if you have any questions in the comments. And DM me on Instagram if you do so. So I'm going to hand it back over to Bruce. I'm not sure how this ends, but go ahead, Bruce.
Oh, it ends badly. No, just to follow up here. Thank you very much, Carmine. That was excellent. Very, very simple, very straightforward, and it's all here in the price action. And really like your tree metaphor there as well. Understanding supply and demand. It's an auction, and this is what's happening in that auction. Guys, if you like this video, please give us a like button. Hit the like button there. Subscribe to our channel. Makes a big difference. We can have more webinars like this with Carmine. Yeah, I put the link in there for Carmine's a special offer to Bookmap that's not available from our website. And then comment also on this webinar. I just had a quick question for you about and I'll try to get to some questions if we can. I know Carmine's been going for over an hour now, but Carmine, like, what about exits? Your entries, very, very nice focus on the entries. Are you always exiting at other supply, or let's say you get in a demand zone, are you exiting it at a supply zone?
Yeah, that's a good question. So, pretty much all my exits are either at VWAP, a next supply or demand zone, next support or resistance level. If I spot something when I enter a trade and a few minutes after I enter and something spots up on the tape and the original thesis that I had may now be proved wrong because of something that, provided a red flag or something that may be incorrect with my original thesis, then I may exit the trade prematurely. But I would say 90% of my exits are either VWAP, support resistance, next supply or demand zone, or just something that provides a red flag that has to make me exit the trade, at the moment, whether that be news, whether that be just, a strange volume pattern or something of that nature. But yeah, entries are very important. Exits are even more important. And I think before anybody puts a trade on, they must have a predetermined plan where they want to enter and where they want to exit and only stick to that. For me, supply demand, support resistance, VWAP, high a day, low a day are also good reference areas, but that's pretty much it on that note.
Okay, and then also too, I think I hooked you up with the stops and icebergs indicator, but you showed some examples in there that really were very suspiciously look like icebergs, just absorbing as much as they could. Anyway, I'll connect with you after
For sure.
and maybe get you connected again with the stops and icebergs indicator. Okay, so I think that's everything. Thank you everybody for coming. Thank you very much, Carmine. This was really good. Really appreciated it, and would like to do more with you. It's excellent stuff and very very simple, but very powerful.
Yep,
So
exactly. A lot of traders overcomplicate the process. When I stopped looking at indicators or stopped trying to focus on 100 different things, that's when I became such a better trader because I wasn't influenced by the noise in the market. There could be a lot of different pieces of information that provide noise, and the more simple you can make your trading, the better off you're going to be in the long run. It might feel different when you first, transition from something that's more complex to simple, but it's very powerful. The cleaner your charts and the more simple it is, the better off you're going to be.
yeah, yeah, excellent. All right, so thank you very much, everybody. Thank you, Carmine. We'd like to do it again with you.
For sure.
Okay, all right, take care. Bye bye.